Market makers always buy cheap and always sell expensive. They never buy in a premium. They never sell in a discount. If you're trying to act like a market maker, use this principle of only buying and discount, only selling in premium, only buying in premium once the discount of the daily range gets tapped, only selling in discount once the premium of the daily range gets tapped. Afterward, you could sell in a discount. Why do I say that? Because the drawn liquidity will change. Right, the drawn liquidity will go from a bearish drawn liquidity to bullish. How come? I mean, why can you sell on a discount after the premium daily range gets tapped? Because the drawn liquidity will be the daily range low. So if let's just say this daily range is a bearish daily range, right? If the premium of the discount of the discount of the daily range gets tapped, drawn liquidity will become the daily range high here, right? So now if the market goes up here, some here, right? It's staggers around here. You could buy around here without worrying about this premium without worrying about the premium area or the discounted area, right? So you could just buy here, go up higher. Why? Because the daily range is a form of drawn liquidity, right? The equilibrium is a form of drawn liquidity, and the daily range high and daily range low is a form of drawn liquidity, right? So once the discount of the daily range gets tapped, the drawn liquidity will become the daily range high. Once the premium of the daily range, once the premium of the daily range gets tapped, the drawn liquidity will become daily range low, right? Daily ranges are one out of the 7, I think 6 or 7 forms of drawn liquidity. Because there's multiple forms of drawn liquidity. One being idle to ERL, other being daily ranges, equilibrium, candles, what do you call it? CRT candles, ranges, weekly profile, daily profile. There are forms of drawn liquidity there, right? Not daily profile, more on the weekly profile because it affects the higher time frame bias, so it gives you a higher time frame drawn liquidity, right? Because you can see on the daily time frame, because of big bearish candle. Why? Because it could have been a daily Friday retracement. How could it have been a Friday retracement? Because it was a classic expression profile, one to the upside. So Friday will need to retrace. It will not always retrace, but in this case, it made sense to retrace because market did a big range in a weekly candle to close in a fair price. So it made sense for it to close in a bearish candle, right? Not expand from here. Now, daily ranges. One of the most important market makers model. If you want to be a market maker model, if you want to be a market maker model, if you want to be the market maker and want to always trade with them, always buy in a discount, always sell in a premium, always buy in a premium once the discount of the daily range gets tapped because the daily range is wrong located with daily range high. Only sell in a discount once the premium of the daily range gets tapped because daily range wrong liquidity will become daily range low. This is how you can get the closest aspect to being with the market makers, not against them. Because market makers, they never buy cheap. They never sell cheap. They never buy expensive. They always buy discounted. They always sell premium. And real quick, before we start off any further, before we teach you guys how do you spot a daily range, make sure you guys join Discord. Link this down below. Make sure you guys like, comment, subscribe, share. Make sure you guys join Discord. I'll see you guys on Discord, and get straight right back into the video, right? The daily ranges. How does the daily range get created? It's very simple. And get straight into it. A daily range is created from a low or a high getting soup. So you're looking for a low, then a high. This would be considered as a bullish daily range. You can as well do the same thing in the opposite way, but you can still go up higher, right? Because the higher time frame dictates the drawn liquidity, right? So you're looking for either a high or low to get soup. Low got soup first. Then you're eventually looking for a high to get soup. Then you're looking for one more thing. You're looking for a stable low and a stable high. Stable low being the swing low. Stable high being this high, right? And keep in mind, in daily ranges, you could use swing highs and swing lows. There are in daily ranges does not matter, but in ranges, highs and lows matter, right? But in daily ranges, it does not. We have a stable low. After the low getting pierced, and we have a stable high after the range high. The range high gets after a high gets pierced, right? What do I mean by stable? What I mean by stable is where these highs and lows does not get souped unless the discount of the premium or the premium of the dividend gets tapped. So these highs will not get souped and these lows will not get souped. So these are stable, right? These will be a used for a intermediate price action to determine where the market will highlight to go to, right? So these are basically used to know, okay, there's a daily range happening around here. These are stable, right? So that means these high. All I mean by this is these highs and these lows will not get souped, right? So now eventually we know, okay, there's a daily range here. There's a stable high and stable low. We can have a daily range here, right? And a premium, you always want to sell. In a discount, you always want to buy. Today was a perfect example. Today I made a loss. I bought in a premium zone area. So I faced a heavy loss here, right? I did not lose that much, but I did face a very loss because of slippage. If you're in the wrong side of the market will stab into your stop loss very hard, and it would make you lose more than you're supposed to lose. So if you're losing like what, -1%, it will make you lose -1.15%. Right? Why? Because usually, if you're in the wrong side of the market, this one actually that was on the wrong side of the market. The higher time frame drawing liquidity was bearish, not bullish, right? Since I'm on the wrong side of the market will fuck around, boom, we'll find out, right? But if you're in the right side of the market usually does do this, right? If you're, let's just say, in the right side of the market still stabs you out, right? Market will usually do is go slowly, eventually go up higher from here, right? Without doing a huge slippage to the downside, stopping you out very hard like this, right? In this case, it did that in a lower time frame. So learn from my example. Never buy in a premium because the discount never got tapped. Never sell in a discount. Only sell in a discount once the premium of the difference gets tapped. In this case, this daily range is bearish, right? Not bullish, right? And this daily range matters on two markets. It matters on a ranging market and a expansion market, right? This market right over here was ranging. It was not expanding, or else called as a trending market. Daily ranges matter on both markets. It matters on a daily range. It matters in a ranging market and as well in a trending market. In this case, market was trending to the upside. So since it was trending to the upside, the daily range still matters, right? Even on a ranging market, the daily range still matters. I took a long on Monday. I faced a loss. In this case, I bought in a premium. I faced a loss. I eventually learned from that lesson. I was like, okay, I will not buy in a premium. I will not sell on discount. Only buy in a premium once the discount of the daily range gets tapped. Only sell in discount once the premium of the daily range gets tapped. In this case, I wrote that down, but that was during the ranging market. Now this is during the trending market, right? Market is now currently trending to the upside or trending to the one direction, right? With a pullback. So now this tells you that daily range matters on both sides of the market, even on even a expanding market and even on a ranging market. Market was ranging, it mattered, right? Closed up high from here. I took this long for a 15 RR, and it matters over here as well. Or even though when the market is trending, why? Because daily ranges, market makers, they never buy high, they never sell low. They always buy low, they always sell high, right? This is the closest thing that you can get to a market maker. This is the closest thing that you can get near and trade with them, not against them, right? Let me show you guys one example of a daily range. You're looking for a low to get souped. You're looking for a high to get souped as well. So a low got souped, a high got souped. So right when a low got souped, we got a stable low already, right? This low did not get souped. In fact, you can see how when the market souped out the high, this high right over here was not stable. Right? You can see the high got souped. So you would not know, if a daily range is, over there or not until you get a stable high. Eventually you got a stable high all over here. And even over here, there was a, daily range here. You can see daily range, this kind of daily range got tapped, eventually went up high from here, right? So, and eventually you made another stable here, and eventually you never want to buy in the premium. You never want to sell in discount. You only want to buy in discount, only want to sell in premium around here, right? So over here, why do I face a loss? I face another loss. I face a negative 1% loss. Why? Because I'm buying a premium, and I only should be buying, and you should only buy in a premium once the discount of the dividend gets tapped. Should only sell in a discount once the premium of the dividend gets tapped. Eventually, the drone liquidity is going to be in the dividend range low, dividend range high, because drone liquidity, the daily ranges are one form of drone liquidity out of the 7, right? So thank you for watching. This is how you know how to get the closest aspect to trading with the market makers. Market makers not against him, right? Market makers always buy cheap, they always sell high, right? And this is how you spot a daily range. This is how a daily range is created, by market sweeping out a low and a high, eventually making a stable low and a stable high, and eventually there's a daily range here, right? And keep in mind, daily range matters in both type of market. In a ranging market, it matters. In a trending market, it matters. It matters in a both market. There is no manipulation market. It only matters. There's only a ranging market or expanding market, right? Or a trending market. So thank you for watching. Make sure you guys like, comment, subscribe, share. Make sure you guys join the Discord. Links down below. And I'll see you guys at Discord. Peace out.